Hi guys, this is Dan from the Investment ABC, and this video is just an update about me buying my second put options on the Dow Jones Industrial Average. I sold my first put with a 20% profit in just 2 days, and this one will be my second put on the Dow. So we will see how these puts will play out. My strategy is to put a tight stop loss at around 10% loss. If the markets give some of today's gains back in the next 2 days, I will pull my stop loss to the price where I bought the puts today. This strategy helped me in the past to minimize risk and make some good profits. So why did I buy puts today? We have major resistance between the 25,000 and the 25,500 area in the Dow Jones, and the market rallied higher yesterday and today on low volume, which indicates to me this might be a fake out and we might roll over by the end of the week. The sentiment is also getting more and more bullish, while bears who shorted the market so far got burned, and the bears are scared they will get burned again. They are also slowly thinking the Fed will pump the markets to new all-time highs. At the same time, more and more bullish news about economic data and the reopening of the economy is spread by the mainstream media to sucker in more and more retail investors, while the smart money is selling to them into this rally. In my opinion, the market should most likely pull back because of a sell the news event, which is the reopening of the economy. Everyone knows that the stock market is fundamentally overvalued and that the rally is mainly driven by the Fed. So capital is nervous right now, although it doesn't look like that at the moment. When the smart money is finished selling the stocks, we will see some catalyst, most likely some disappointing news on the vaccine story or a surge in new cases which will trigger at least a short-term pullback. The underlying problem, which is mostly corporate debt, is getting worse and worse and will ultimately lead to a deleveraging of that debt at some point in the future. The Fed is trying to prevent companies from going bankrupt and is providing as much liquidity as necessary for companies to survive right now. But the question is, what will happen with all the debt in the balance sheet of major corporations? Interest rates need to stay forever at 0% or go even negative to prevent a wave of defaults. All this is just buying time and postponing the inevitable, so I'm really cautious. The tech companies with solid balance sheets got so expensive right now that they move harder and harder to the upside. Another reason why I think we might see a pullback in the stock markets is the price action of another risk asset small retail investors love, Bitcoin. Since Bitcoin made its low in March together with the stock market, it also had a really nice rally together with the stock markets. But since Bitcoin peaked at around 10,000 US dollar and failed multiple times to break above that resistance, the correlation with the stock market is no more. At times, Bitcoin is a good leading indicator for the stock markets. It shows that the risk-on environment is getting exhausted and maybe it's about to turn into a risk-off environment again. To me, the risk-reward ratio looks good to take the short side right now, so let's see how this plays out. If you want to buy put options, never forget to place your stop loss, guys. If you like this video, hit the thumbs up button, subscribe and comment if you think I'm too early with my short position or not. Bye guys and see you in the next one.